All right, today we're doing a technical deep dive into INBS stock. We are going to break down all the key signals that have traders glued to their screens watching this thing's every move. Let's get right into it. So this stock has seen a massive surge lately, and that really gets to the heart of the question we're tackling today. Is this the start of a real, honest-to-goodness recovery, or is it just a temporary blip on the radar that's going to fizzle out? To figure that out, here's how we're going to break it down. We'll start with the stock's comeback story. Then we'll read the trend lines and check the momentum. After that, we'll look at some really important volatility signals, map out the key levels to watch, and finally, pull it all together into a clear strategy. Okay, let's kick things off with the big picture. What's the story with this stock's comeback? Everything we're about to look at hinges on this one number, the recent closing price of $9.34. Think of this as our starting point for all the analysis, so keep it in your head. And bam, right out of the gate, we see this incredible tug of war. In the short term, the bulls are definitely in charge. The price is flying high above its recent averages. But if you zoom out, the long-term picture is still pretty bearish, with the price way below its historical trend. It's this tension that makes this stock so fascinating right now. Next up, we're going to read the trend lines. And I like this way of thinking about it. It's kind of like looking into the stock's memory to see where it's been. Now, the main tool we use for this is called the Simple Moving Average, or SMA for short. All it is really is the average price over a specific time period, say 20 days, or 50, or 200. It just smooths out all the daily up and down noise so we can see the real, underlying trend. This chart just paints the picture perfectly, doesn't it? You've got the current price at $9.34, but look at that huge hurdle up ahead, the 200-day moving average sitting at $13.15. That right there is the long-term mountain this stock has to climb to prove this recovery is for real. Let's break this down even further. You can see the story in three parts. 1, the price is way above the 20-day average. That's a sign of a really powerful short-term move. 2, it's also cleared the 50-day average, which is a classic bullish sign. But 3, that 200-day average is still looming overhead, reminding us that the long-term trend is still technically down. Okay, so we've got a strong short-term trend, but does it have legs? Can it keep going? That brings us to momentum. In other words, is there actually enough fuel left in the tank? And here's another fascinating contrast. We've got two different momentum indicators telling slightly different stories. The RSI, which is a leading indicator, is way up at 65.45. That shows us there's very strong current buying pressure. But the MACD, a lagging indicator, is still negative. It's still being dragged down by the stock's weaker history. This is literally the past fighting with the present. So, which one do we listen to? Well, a third indicator, called the stochastic oscillator, might just be our tiebreaker. It's showing what's called a bullish crossover, and it's basically suggesting there's still plenty of fuel in the tank. The key thing is, it suggests this move still has room to run. All right, now for our next section, and you're going to want to pay attention here because this is where things get really dramatic. We're talking about a major signal that points to a true breakout event. Here's the crucial point. The price has officially broken out above the Upper Bollinger Band. Now, for technical analysts, this isn't just some small move. This is like a 5-alarm fire drill. It signals that something significant is underway. So what on earth does that actually mean? Well, think of Bollinger Bands as a typical trading range. A breakout happens when the price literally punches through the ceiling of that range. It's a sign of a sudden, powerful spike in volatility, and in this case, it's strong confirmation of this upward move. And this number right here, this is the confirmation. The average directional index, or ADX, is at 29.71, and it's rising. A reading near 30 tells analysts that this isn't just random market noise. It's a real, developing, directional trend. In other words, the breakout looks legit. Okay, that's a lot of data, so let's boil it all down into something you can actually use. A practical cheat sheet of the key price levels that traders have their eyes glued to right now. The easiest way to think about this is in terms of floors and ceilings. The support levels are the floors the price needs to stay above to prove it's still strong, like that breakout point at 877 and the daily pivot point at 823. On the other side, the resistance levels are the ceilings the bulls are trying to smash through, like that zone around 1058, and of course, that major long-term ceiling at 1315. And that brings us to our final section, putting it all together. After looking at all these technical signals, what's the strategic takeaway? So what does this all mean?
Well, the technicals point to a pretty clear conclusion. The stock is in a bullish breakout and recovery phase. All these different signals are starting to align, confirming a powerful shift in the stock's character.
So how might someone actually approach this? Well, the strategy laid out here suggests targeting that first resistance zone, somewhere between 1050 and 1085. But since the stock has already run up a lot, a potentially safer entry might be to wait for a small dip, a pullback to that support area around 820. And most importantly, risk management is key, which means setting a stop loss below that medium-term average of 737. Now for a few really important final thoughts. First, chasing a stock after a huge breakout like this is always risky. If it can't hold that 877 level, it could fall back down just as fast. And here's a fascinating little detail. The stock has a low beta of 0.36. That basically means it tends to dance to its own beat. It's driven more by its own news than by what the overall market is doing. And that leaves us with the million-dollar question, doesn't it? The technical signals are practically screaming that a powerful recovery is happening right now. But the ultimate test is still ahead. Will this newfound momentum be strong enough to finally conquer the weight of its long-term bearish history? I guess only time will tell.